Time to go across to Gautam Shah, founder of Goldilocks Global Research. Gautam, thanks so much for taking the time as always, and pleasure speaking with you. Good morning from where we're at. And the question to you is, with this positive development over the weekend and the fact that it seems to be holding for now, what is the view on the Indian equity markets? We're seeing a pop. Does that continue, or do you expect that people to take money off the table now?
Good morning. I think the market saw these developments in the last couple of weeks because we had a situation wherein global markets corrected quite a bit. And in that period, Indian markets were quite resilient. In fact, we had a perfect storm scenario when we were at the lower end of the range around 23,100. And in that period, the way the market held out and the way the banking sector made a comeback tells me that at least we are out of the woods for now. I think for the last 15 months, India has been underperforming versus the rest of the world. But when we look at the ratio charts of India versus the world, there are indications that this underperformance is probably coming to an end or has come to an end. This only means that India will now move with the rest of the world. However, we are still not looking at significant gains for the Nifty and the large caps. I do believe that we will see a breakout above that level of 24,000, which I think is a very important resistance. And once we can overpower this number, I think we are looking at 24,600 and 25,500. So probably for the first time in 3 months, I'm a little less cautious. I think this move of the last 2 days is quite durable. This rally is durable. And the comeback in banking and the fact that the technology sector could potentially be bottoming out here tells me that the Nifty will do well. But the real opportunity and the parallel bull market that is playing out is in the small caps and the micro caps. And I think that's where alpha will be made.
Very interesting. Gautam, good morning, Neeraj here. You know, and the reason why we wanted to talk to you so soon, because you kind of hinted at this. In 2 days, the markets did what they haven't done in 2 months, if you will. And the rupee is now stabilizing, which also helps the mood, right? Even if flows don't come back. You said a very interesting thing, that while the bank Nifty and the IT indices come back, the move is, or the major move might likely still be at the mids end of the market, right? Will it be thematic out there, or will it be very, very bottom up and therefore difficult to identify pockets? I know you can't stocks, and hence I'm forced to ask you this.
You know, honestly, it's been quite rewarding to just buy the basket. If somebody just bought the small cap or the mid cap or the micro cap basket in the last week of March, you would be up 27% in a matter of 2.5 months. And people talk about India's underperformance versus the rest of the world and the fact that there is zero return on the Nifty. I mean, the idea is to be in the pocket which is performing. I mean, that's part and parcel of every market environment, and that's what has really happened. You know, everybody's so obsessed in trying to find what the next Nifty trend is. Is it really going to go up big, or is it going to go down big? I think nobody can accept the fact that the market can stay in a range, stay in a sort of time correction phase, which is what is playing out for the large caps and for the Nifty. And while this happens, you have the other part of the market, which is 70% of the rest of the market actually doing well. So honestly, you don't need to pick specific names within micro caps and small caps, but if at all you want to, I think these are all economy proxy names like PSUs, power, energy stocks, and then selective metal stocks, I think, and capital goods stocks. I think some of these stocks can really stand out.
Okay, you know, interesting name segments that you're talking about, Gautam. The question now is, I'm sure someone who's really invested long ago who wants to probably book profits in certain sectors which have probably made money, where would you say you could book money and then look at really sectors and within the sectoral space as well? Would it be the mid caps or the large caps?
Well, firstly, I continue to believe that there is no major opportunity in large caps even till the rest of the year. They will give you a high single-digit returns, but nothing special and nothing substantial. Real opportunity remains in the small caps and the mid caps. And I think the place where we have recommended profit booking in the last 1 month is metals. Now, the metals index has been our favorite for about 9 months. While the metals index was up 40%, many other sectors in the market fell quite a bit, but we got an indication that it's a little overdone. So I think our focus is now moved to completely energy, pharma, capital goods. I think these are some sectors and some pockets that will deliver supernormal returns.
Sorry, interesting you say energy. I'm just coming in because there's also a news flash, by the way, viewers on the screen, that reports are suggesting that The government is seeking assessment of old wind turbines, and therefore there could be replacement orders, I presume, and which would actually mean positives or larger order flows. The government is looking to replace the old turbines, and therefore for Suzlon, Inox Wind, and a clutch of others, there might be some interest here, and including introduce more efficient models. So keep these stocks at the back of your mind. I heard you say energy, Gautam. Is it new renewable energy names, and therefore maybe the Inox and the Suzlons come into focus, maybe the JSW Energies, Adani Greens, Adani Energy Solutions, and some others come into focus? Or is it the traditional energy names which are at the top of your mind?
Honestly, you pick any name that you mentioned, and I think you'll make money over the next 1 year. And the reason I say this is because the same thing happened with chemicals 5 years back. When the chemicals bull market played out, everything was a beneficiary for about 3 years. Many stocks moved up to 3x, and some of them moved up 10, 15x. So I think energy, is a structural mega theme. I think the government understands it. The market understands it. Smart money seems to be following it. The charts are looking well placed. We have seen a bit of a correction in the last 2 weeks, but I think this is a buying opportunity. So across the board, I think energy is a theme that you could look at, and you could actually make a basket of the top 7 names. It might make a lot of sense.
Okay. I do want to ask about what you said on the metal pack though, Gautam, because I was curious whether you're tracking the underlying commodities as well and what trends you're seeing there, because aluminium overnight, there was a pretty sharp gash. Do you see that continuing? Is that the reason why you are unwinding or looking at the metal pack a little less favorably?
Well, I think a couple of weeks back, we got the first indication on the charts that the rally is a little overdone. As I said, it's up 40% in the last 9 months. Many of these stocks have had great runs, and now you're seeing the base metals come off a little bit. I think this could be temporary. So my view is not based on what has happened to base metals last night, but I think on an overall basis, I think they have got into profit booking mode. And now as the market moves into a new phase of probably sustaining above 24,000 and doing well, I'm sure newer sectors will come and participate. In fact, I'm firmly of the view that the IT sector is close to its bottom. I've been bearish on it for the last 18 months, but for the first time in a long time, we've started to say that these are good levels to basket buy IT. I think most of the negatives are in the price. The AI disruption is in the price. Companies have said what they have to. I think they realize what they need to. And I think the market understands that as well. So at 27, 28,000 on the IT index, I personally feel that if you are an investor with a 2 to 3 year mindset, you can only make money.
Gautam, quick one when it comes to financials. A lot of interest emerging with regards to your mid-cap and small-cap, private side banks as well. Is that what you would be betting on versus the PSUs?
I actually still don't think there is a major opportunity in financial services. Even if the bank nifty goes to 58,500 or 60,000, it's nothing great in percentage terms. In the US, you have $2 trillion, $3 trillion companies going up 50%, 60%, as if they are a micro cap. So in that sense, Indian financial services stocks will not deliver serious returns. We still have our own headwinds. I'm not trying to say that the Indian markets will get into a bull trend, a mega bull trend once again. We will continue to oscillate in a sort of a band. So financial services is not a great opportunity. But if I have to choose, I will still go with the PSU names because I still feel that PSU is a big opportunity. The dividend deal is kicking in. Government has shown its intent. The charts are very good. The ratio charts are excellent. So I think PSUs over private is where action should be in financial services.
In spite of the 23% up move that we've seen in the last 1 year in terms of PSUs versus private banks doing nothing?
Yeah, I think so. I still feel that there is a huge valuation mismatch, which is still getting corrected. The fact that SBI has outperformed HDFC Bank, I think, is a clear message from the market. And I think this trend is likely to stay for the rest of the year. And in today's geopolitical world, where anything can happen anytime, I'm very comfortable with PSUs over the private names.